Evening, everyone. Welcome to the quarterly review meeting for the Town of Fairfield Board of Finance. Would everybody please rise for the Pledge of Allegiance? I'm going to ask Mr. Mayor to lead us in the pledge this evening.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Good evening, everyone. We have an action-packed agenda this evening. The first item is a carryover item from our last meeting, which is to vote on the continuance of the following resolution recommended by the Director of Public Works. This is the $20,000 worth of bonds related to the single-head electric vehicle charging stations to be placed at a couple of our high schools. We had some follow-up questions on that I was informed have not yet been answered and or approved by the Board of Education, so I'm going to ask that we continue that to the next meeting. Then we're going to review the current state of the town's pension and OPEB funds. Mr. Vahey is here tonight. We're going to review the Board of Education year-end financial position, review the town's year-end financial position, and review additional information from our last meeting, which Mr. Mayor has brought on capital and capital projects planning. So there's only one item for vote tonight, and again, that's a continuance. Does anyone have any questions, comments, concerns? Before we get started, I do want to extend my appreciation to the fire department and to the fire chief, who were able to bring the newest piece of apparatus for our review, really adult touch-a-truck, before the evening tonight, and that is the Fire Rescue 1. It's an impressive piece of equipment that we just took ownership of within the last few months. They estimate it's going to do about 1,800 runs a year, and it's very impressive, from being able to support water rescues to land rescues to incidents on the highways and bridges and roads around town. And it's good to know that we have that piece of apparatus on call for us at all times. So I want to thank the fire department for bringing that to us tonight to take a look at. With that, we'll go to item number 1, and that's to vote on the continuance of the following resolution as recommended by the Director of Public Works. Resolved that Michael C. Tetro, First Selectman of the Town of Fairfield, is hereby authorized to expend up to $20,000 to purchase and install 4 single-head electric vehicle charging stations at 755 Melville Avenue and 785 Umpqua Road. Said funds to be 100% reimbursed from grants, funds made available by the Department of Energy and Environmental Protection under Connecticut's Public Fleet Electric Vehicle and Public Workplace EV Charging Station Incentive Program. Do I have a motion to put this before us? Mr. Brown, do I have a second? I'll take it from Mr. Mottola. Everyone will remember at one of our last meetings this item came up, and we requested more information on what the plan is for the rollout of these stations, as well as we wanted to make sure that the Board of Education approved the rollout of this, because remember that these come with an expense, not the installation or the system itself, but the actual cost of generating the electricity. And that would be charged to the Board of Education, because these 4 charging stations would be at 2 locations that the Board of Education controls. We wanted to make sure that the Board of Education understood what the plan was, that they voted on that plan, and that they were recommending it to us because it would be involved in their budget going forward. Mrs. Marmion.
I think we are also asking questions just in terms of the overall strategy of the,
No
so
question.
I'm wondering if somebody's going to come in front of us and present on that as well.
That is the hope, and we hope to have that at the next meeting. The key item was the Board of Education vote, but you're absolutely correct. It's the overall strategy. So seeing that that hasn't been done, I'll make the motion that we continue this to our next, actually I'm going to move this to our November meeting, because our next meeting is just next week, and I don't believe this is on the agenda for the Board of Education at this time.
It's on for October 4th, Mr. Chairman.
Oh, thank you. So that'll be after our meeting, so I'm going to ask that we move this to our November board meeting. Do I have a second to my motion? Mr. Mottola? Any questions, comments, concerns on my motion? Seeing none,
Just a quick question, if we'll still
Use the mic.
Will we still be eligible for the grant money if we don't approve it until November?
My understanding is yes. And we've done our part, we asked that it be done for this meeting, and it's not done. So Okay. Okay, thank you, Mrs. Leclerc. All in favor of the motion? Opposed, abstention, that motion carries. Thank you very much. We're going to call Mr. Vahey up. The Pension Board to review the status of the town's pension and OPEB funds. Thank you for being here. Most appreciated. And do you want to walk us through the reports from Callan?
Certainly, thank you. You should have two, one for the main pension, one for OPEB.
Yeah, can we start with the pension one, please?
On the first page, a good summary of where the asset levels were at June. End of June, they're $345 million. You can see the distribution across the various asset classes. Cash is heavy because one of the hedge funds we are invested in, which is the middle of the page, is no longer in operation. They had withdrawals from several large investors, and we had said that we would also pull our assets if the fund became smaller, and that happened. That was over the year end, so we were not unhappy with the performance, but I guess that strategy was not in vogue, and so they had to draw down. They also, I think, had a poor marketing plan, but it's owned by a private equity firm. So as they're winding down and distributing the cash back over the span of a year, we have to decide either on another hedge fund or potentially something that's a little bit more liquid and similar into what we were getting from that hedge fund, which is called a multi-asset class fund. So we're in that, making those decisions tomorrow. So we'll see how that turns out. But otherwise, distributions are, per the guidelines.
Questions, comments on just the distributions of the funds as compared to the targets? Seeing none, Mr. Vahey, can you go to the returns, please?
Yes, you can see it by asset class and the summary on the back page. And for the fiscal year, our return was in line with most public plans and endowments, somewhere around I'd say the general range is -3% to maybe +3%. So we're sort of right in the middle there with call it a 0% gain. The majority of that, we had an excellent year. This is where you can see asset diversification really comes to play, which we are a little different from other public plans in that we're big enough to do that, and we do have some, if we were just in equities, particularly global equities, we would have been hurt this year, but we have stuff in private equity did really well, real estate did very well. Sort of hedge funds were middle of the road, and our fixed income better than you would have thought. We got 6% out of 6% U.S. and 4% global. And as I said, the equities kind of, particularly international equities, got hit.
Questions on returns? Mr. Vahey, so we're essentially flat fiscal year at this point, right? And we're at 6.36% over the last 36 months, which is better than the fund benchmark. And we're at 6.74 versus 5.5 over the last 60 months.
Yes.
Or 5 years. Tell us a little bit about what's going on with the review of the assumptions and the analysis of...
We spoke about doing an experience study, which was due, and that's happening, and I think the actuaries are coming in November, I believe, and they'll put in their 2 cents about liabilities and how they've performed, and also they'll have some input on where they think inflation's headed and some opinion on the markets. But we took Callan's input, and Callan is right. Depending on what inflation you use to take your nominal returns to real returns, somewhere around 4.75 plus something that was 2% inflation to take you to a 6.75 sort of real return, and I might be off, might be 6.5, but somewhere around there. So we'll be selecting a new discount rate for the forward 5 years. It's probably going to be in the, I would say, very safely in the 6 to 7% range.
So, and that's an adjustment downwards from where we currently are, correct?
From 7.5, but we wouldn't do that all in one.
Step downs, right?
Yeah, we would do step downs.
And when are those decisions going to be made?
I would
By the
hope.
pension board
I would
and
hope.
everything?
So we have. They're not going to be made this Wednesday, and then the actuaries come in November, and then we have. And I think our November meeting and December meeting are combined because the November meeting would have been Thanksgiving week. So actually, we have our. It's not a special meeting. It's actually scheduled this way. It's the first week in December or whatever. Since we're the fourth week,
Right.
fourth Wednesday. So I think that decision will be made in that special December meeting. So it'll be done by year end.
Mr. Mayor, have you guys started to discuss how this is going to factor into the budget process for the next fiscal year? Can you put a little water?
Yes.
And what's the plan?
Well, the plan is to, follow, is this thing on? I don't think so. It's not on, it's not connected. Hello? Is it on?
I don't hear it. Thank you.
I don't have the range with me, but basically we're currently at 7.5. There's talk on the pension board that 6.5 might be a better number. There's some people that are at 7. We're going to get the input from. We already have the input from Callan. We're going to get the input from the actuaries at the December, I think it's December 8th meeting. Out of that result, plus the experience evaluation, we'll get new ARCs, and those numbers.
So is the idea to follow those
So
numbers like we've
follow
done in the
those
past?
numbers as we did in the past. I imagine that let's just take what I think is a worst case scenario. We go down to 6.5. I don't believe as kind of like a target. I don't believe the board would go there like in 1 year. I think it'd be a phase in kind of thing. So I think that's the whole discussion.
Yeah, and I mean, if you look at say it is 0.2 per year, I actually that's not going to be what's going to drive your ARC and your budget impact. It's going to be the experience study and what changed with the liabilities. Because I think we had, well, you guys are more privy to that, but I think we had several retirements that had been, they just weren't happening. So I know that when the actuaries look at actual to planned retirements with that slug of folks that came through at least the fire department, it's going to affect that, the fire department side of it. And on the town side, I think you also had a decent amount of folks suddenly, retire. So that will, those are going to move your numbers much more than.
I wasn't just
Discount
concerned about
rate.
the discount rate. I was concerned about the experience study as a whole. 'Cause
Yeah,
it's
but I have no idea. That's.
But that's going to be available towards the end of November, correct? I'm just saying, is it going to be, I'm worried about the number one, the philosophy of making sure that is tied into our budget process, because that's what we've done over the last several years.
Correct.
Tied that into the budget process. And number two, I'm worried about just the timing of getting that information, because I know you guys are starting to put together the budget.
Oh yeah, no, we'll have the numbers will be run. The actuary hopes to have most of the experience study done by November, by the December meeting, and then at that meeting, discount rate will be selected. Then it's just a matter of they'll already have done the work. It's
Right.
just a matter of plugging it into the.
So you're
Right.
confident
So
that
we're-
you'll
so
be
we'll-
able to.
yeah, we'll definitely have the number in the budget without a problem.
Okay. And the philosophy right now is to follow what we've been doing.
Correct.
the last
Right,
number of
yeah.
years, which is tied to
Right.
the study.
And as Mr. Bay pointed out, there's going to be some negatives in the study. There's also some positive. Inflation has been lower than
Right.
anticipated, and so it's like, it's just it's a guessing game to figure out where we'll be. So
Okay, that's what I wanted to make sure, is we weren't sitting here guessing in a couple of months, in a few months, so. Thank you. Any other questions from board members regarding the pension, any aspect of the pension right now? Seeing none, let's go over to OPEB, which is the next report in the package.
I would also say, since we're a quarter past this period here, just for your information, we're at, I think, 2.5% for tomorrow's meeting as far as fiscal year to date. So
Excellent, thank you. Thank you for that. It's good to know.
OPEB is showing, if you flip right into it, look at the different asset classes. It's showing $2 million, but that all got that was invested soon after this report was put out. So it's in a mix of pro rata by the allocations into these assets. So it's really, I think it probably had zero cash soon after this report came out.
So is it a timing issue with the report as to cash?
Yeah, I forget when the payments come into this.
yeah, basically it was the transfer was made to the account from the general fund, and had I acted a little bit quicker, we could have got in by June 30, but it was just a few days.
Okay.
But
And we're up to almost $28 million in this fund now.
yeah, it's definitely, as of now, it's north of 28 million. And return wise, it's somewhat similar, although you can sort of directly see some of the lack of diversification in this fund because of its size, in that it's it really is sort of 0%. You didn't get that extra lift from the other asset classes for the fiscal year.
And for the last 36 months and 60 months, we're right in line with what the benchmarks really are.
Yeah, which would be expected since it's predominantly just
Exactly.
ETF driven, except for the fixed income.
Okay. And experience study driving this as well, or what's driving this right now? What are we doing on this now?
You guys are turbo funding this. This isn't really.
Yeah.
Yeah, we, the experience is basically the healthcare experience and the healthcare trend.
Yep.
It's factored into the ADEC. And this is an every other year valuation. This is a year of the valuation, and we, as you know, we 100% fund this in the budgetary process as well.
When are we going to know the numbers on this, do we think?
I was actually talking to the actuary today, and he doesn't have a definitive date, but it'll be around the same timeline, certainly by January.
Because these would be two of the biggest cost drivers for next year's
Yeah.
budget.
Yes.
Any significant changes in these two accounts?
Yeah, we're anticipating changes.
Yeah. Right. Any questions, comments from board members on OPEB? Seeing none, Mr. Beatty, thank you very much.
You're welcome. And last time I was here, wasn't here actually. It was in the Osborne Hill. We talked
Yep.
about the DC plan, so I don't know how anything has to move through the system, whether it's an RTM directive thing or how that. But I mean, I think we're still pretty open to shouldering fees, asset class selection sort of stuff.
Yeah, thank you.
Education. So.
Yeah, thank you for that. I think it is actually, upon some follow-up, under the purview of the RTM, and I believe the Board of Selectmen are involved in that as well. But Mr. Tetro's here, and it's probably something we should take up with RTM leadership, because I still think, this is my own personal opinion, I still think having our investment team, our pension team involved in that is a prudent course of action.
Yeah, you've got, they're, like I said, we're fiduciaries. We're free.
Right.
So, and it would take the legal liability off of, like, say, HR or whoever else they might want to delegate that to. So.
Right. Thank you very much. I appreciate you bringing
Thank
that back up, and I think we should follow up on that with the RTM.
All right, have a good evening.
You as well. Any other comments on that? Seeing none, I'm going to ask that we do a change of order here. Mr. Dwyer asked for this since he's going to be a little bit late, and Dr. Tracy wasn't here for the end of the school year. but Mr. Dwyer was, and we're talking about fiscal year 2016. So with that in mind, I'm going to ask that we delay the conversation on the Board of Education financial position to take item number 4 first, which is to review the town's fiscal year-end financial position. And I know Mrs. Bossi is here. Welcome. And Mr. Mayor. So we'll turn it over to you guys to walk us through some of the good guys and bad guys here for fiscal year 16.
Yeah, just very briefly, as just not last meeting, but a couple meetings ago, the board voted on the expense transfers.
Yes.
So those have all been pretty much discussed, so we're just going to go over that quickly. And then, but we have several documents here that Caitlin will take you through.
In your packet, you're going to find a sheet labeled index. So there's a few documents in the town side report. The first one I think would be a good place to start is the executive summary,
Yep.
which was document number 1. Kind of summarizes in a nutshell where we think we're going to be. Again, this is not audited yet. The auditors have been in. We're still in the midst of it. As we spoke about in early September, the favorable variance is on the revenue side. So that's itemized out on the top of the sheet, starting with the taxes and going down. And we're estimating approximately a $2.9 or $3 million favorable increase to fund balance due to the revenue piece, primarily due to the current, prior, and interest on the taxes. Some of these numbers are going to somewhat look familiar from the last quarterly. I can run down them if you want, or if you guys just have any questions on any one of these numbers, we could go through them. The expense side, we did just, as you guys are looking at those numbers, a little bit differently. As Mr. Mayor alluded to last meeting, 2 meetings ago, we did all the transfers out, and we primarily spoke about 3 numbers, being the favorable operational variance on the expense side of about $200,000, $207,000. Favorability on the contingency account of $383, and the contribution to surplus, the $650, being utilized to fund some of our debt service for next year to help offset the state revenue downfall. So that was about a $1.2 million transfer that we're going to use to help next year.
So remind us again, with the $2.9 million in revenue upside that we've had in the last fiscal year, what does that do to our fund balance as a percentage of?
Well, there is a document 2 in your packet.
Yeah, exactly.
So you can kind of look, again, this is not audited per se yet, but given our fund balance last year of the 8.53, and if I add the 2,000,009 to that, it brings it up to the 9.3 level. Again, this is approximate.
What's that percentage?
That's 9.3%.
9.3, okay.
So the 8.53 was from last year.
Yep,
Actual done. Now, if I'm estimating around this $2.9 million number, so you take your unassigned fund balance at the 24, make it the 27, which is then a percentage of the general fund expenditures and other financing uses, and it's about a 9.33 is what we're estimating.
yep. It's actually in a different place on the schedule, okay. Questions on this? So we're at about 9.33 right now, or 9.3, yeah, 9.33, not, next year we'll be at 9.41 if we hold the budget, correct?
If you keep the 550,
Yep,
that falls down, everything else being on budget.
yep.
Yep.
Questions from board members? No surprises on the revenue side from our last meeting, as I recall, correct? These were all things we had talked about previously.
Slightly, yeah, we've basically beat the horse a little bit, but the numbers, we clearly got more accurate, up-to-date actual numbers through the end of the year.
And of the 2.9 million in increase over budget, about 2 million of that was the current and prior year tax levy plus interest.
Correct.
So we're about $900,000 to the good on other items, led by conveyance. Remind me of Park and Rec. I know we talked about it.
Yeah, a lot of it is driven by, they had fee increases.
Yeah,
So their waterfront was a big piece of that. It's about $240,000. Golf fees went up a little bit. Marina fees are part of that. Golf was another like $250. They're considering now, I believe, Friday plays as a weekend rate. So I have a fee schedule in there, offset slightly by Penfield. And then that transfer that they do at the end of September
Yep.
was about $115,000 this year.
Okay.
So
Just to confirm what Ms. Bossy said, if you remember, last year was unseasonably warm,
Yep.
so we had a long golf season. They also included some of Friday play in there, so that gave us 3-day weekends for that. On the waterfront side, we had an increase in permit fees.
Yep.
They also extended the hours that they were collecting for those at Jennings Beach, so we got more fees in from day past that time. Each in itself, small incremental changes,
Yep.
but over the course of the year, paid off.
Thank you. Okay, so we went through the exec summary. We went through the changes to fund balance, which is all positive and good news. I want to now open it up for questions on the munis reports themselves. We have the detailed munis reports in front of us. Does anybody have any questions on the variances to the munis reports? And thank you. And again, this is something we've been through quite a few times, and we also went through this, to your point, just a couple of months ago when we did the transfers, or a month ago.
Yeah, point of information, when we did the transfers, you had the munis reports without the transfers.
Right,
Now you have the munis reports with the transfers.
right. Thank you, Mr. Mayor, for the clarification. Does anybody have questions? Mr. DeWitt?
Just curious, do you actually have a list of the transfers? I know I don't have it with me.
I mean, yes, yeah. And they're up on the website because it was approved in
Yeah.
the early September meeting, but yes,
Just
I
not
do.
with you, okay.
No, I do.
Oh, do you mind if I just see them?
Yeah, do you want to glance at it?
Yeah.
Yeah.
Any other questions, comments, concerns? Mrs. Marmion?
I just wanted to talk about senior tax relief a little bit. I know that we didn't have as many seniors this year take advantage of senior tax relief. Can you comment on that? Are we not doing enough to get the word out there? What's the trend from this 2016, from 2015, and then what are we projecting really for 2017 in terms of budgeting?
Well, the 2017 numbers in the budget, I would leave that to Mr. Mayor or Ms. Bossy to specify exactly, though it's in the budget book, so you can look at it there. There were seminars that were held at the senior center to publicize the senior tax relief program. So I don't have a great answer as to why it was, again, less than projected. Now, it was, I think, less than projected 2 years ago also, and we kept the same number. So we've kind of kept the target the same, even though we haven't quite hit it, because it is reasonable that we only keep trying to do the promotional aspects, and we'll continue to do that and look for new ways to push that number out.
All set, Mrs. Martin? Question. For 2000, you alluded to it, for 2017, we have the potential revenue adjustment from the state. Do we have any additional information on that now?
No.
I would concur with what Mr. Mayor said.
Nothing.
Well, other than the fact that we don't expect it to be less.
Right.
Well, less than what is the question? In the document that's
Yeah.
exhibit,
Document 3.
document 3,
Yep.
there's the known and the unknown.
Yes.
The unknown state grant negative variance of 1,000,004 was my calculation based on a lot of ratio analysis on the prior cuts, what our share was compared to other people's share compared to the other.
Yeah, you explained that to us
Yeah,
previously.
so the first pilot program check and the first CCS check comes in October for end of September, about middle of October, I think, for the first quarter.
Yeah, I had thought we had thought by tonight we would have.
I was thinking it came in earlier, but I thought it came in at the end of September as opposed to in October, because I'm the one that reported that
Right.
that I thought it'd be September. But,
Right.
but, no, good memory. But I was incorrect on that. So we're kind of waiting in anticipation. I did talk to CCM again, and they have no clue. There is a document out there that kind of implies we might not take as big a hit as I've anticipated here, but it's just a document that's floating around, so it's, who
And-
knows?
And to put it into perspective, right? The total revenue shortfall that you're estimating here is about 3.9 million, which includes an estimate of an additional 1.4 million that we don't know right now, which is what you just said, correct?
Correct.
So if we were to back that out and say that 1.4 doesn't happen, then we're down to 2.5 million, correct?
Correct.
If we're down to 2.5 million, between the expense carryovers and the revenue adjustments, right? We carried over 1.9 million in expense. We did revenue adjustments, we think, based on better available information, senior tax relief, park and recreation, investment income, and the change in the collection rate. That's another 900,000. So that gives us about 2.8 million. So with those items, we've covered the known shortfall, right?
Correct.
So what we're really saying is, if we get hit by the 1.4, then we've got expense adjustments to do in the operating lines of the 2017 budget. Fair
Right.
statement.
The only other point that, or another number I'd point out is, if you remember, my initial motor vehicle at risk, I think, was 341.
Right.
And based upon collections year to date, I'm
Reducing that to 200,000.
reducing that to 200,000.
Okay.
Because the collections year to date have been higher than anticipated in the worst case scenario.
Thank you, Mr. Mayor. Any other questions, comments, concerns, either on 2016, or we just kind of walk through the known impact of 2017 right now? All right, seeing none, thank you, Mr. Tetra, thank you, Mr. Mayor, thank you, Mrs. Bossy. Can we go on to the Board of Education side? I've held out as long as I can hold out.
All right, we appreciate it.
Thank you. And welcome back. Mrs. Mansell, thank you for coming tonight. You want to step us through, I think the big question on everybody's mind is, how did we end up on the medical fund for 2016?
Do you want to hear about the finances? That'll lead right into it?
I want to hear about the medical fund
Okay.
first. Like, just tell us, let's not bury the lead.
The medical retention sheet is the very colorful, long, complicated sheet that's got everything on it from inception of the health insurance last year.
Right. It's
so-
no longer colorful. It's been copied
Oh,
out of
sorry.
existence. Yeah.
Oh, that's a little harder to follow then.
Go ahead.
Okay, so it does have everything literally from the superintendent and Board of Ed's recommended budget, which is columns 3 and 4, over to the last 4 columns, which is the update, 16, 17, 18, 19. It's a deeper blue that you can't see, but those are the columns that I'll concentrate on. Column 16 is the final 15, 16 numbers with the June experience. So we start out with the cash balance of 2 million, slightly more than 2 million. Our BOE operating budget, our other revenues, expenses, we come down to total expenses of 30 million and a final balance of 3.038 million. These are all actual numbers. They tie to the general ledger. The IBNR was calculated by Aon Actuaries, which leaves us with a net balance of the 1.328. because of the transition for us from self-insurance to fully insured, we broke out in column 17 and 18 the 16-17 activity for the self-insurance fund, which is column 17, and then column 18 is the funding for the Connecticut Partnership Plan, the new Connecticut
Yep.
State Plan. So on column 17, we start out with the cash balance. There's some residual rebates that are due us from prescriptions in 15-16, the IBNR, the fees associated with the self-insurance, which leaves us the total balance of 1.378. On column 18, we start out with our recommended budget, the budget adjustments that were made by the First Selectman, Board of Selectmen, and the Board of Finance,
Yep.
leaving us with the appropriated budget of 19,316. We've updated revenue based on updated head count. And you'll see there's a dip there, particularly in retirees. We've also updated the expenses based on those head counts, leaving us with that gap in our budget of the 740. Column 19 is the residual balance. The total balance is the 1.378. The deficit of or shortfall of 740, and the 637 total at 1378.
And the deficit is based on best available information. That can change, correct?
I'm sorry?
The deficit is based on best available information, but they're estimates and can change, correct?
Correct.
Okay. So the 637 residual, you'll also notice, is on our savings here used against the 2017. So these schedules tie together, so you guys are both in agreement on this.
Yes, I've looked at all the numbers on Ms. Munsell's analysis. You know, just in summary, final numbers in, expenses changed a little bit, revenues changed a little bit. As you remember from the budgeting process, they're using a portion of the excess internal service funds dollars to fully fund this current year Board of Ed health insurance part.
Yep.
And then we'd anticipate initially that there would be a residual of 852, if I remember correctly, coming over to the town, and that's turned out to be 647 because of the net of all the changes.
Okay. So we lost 200,000 from where we thought we would be. Okay. Thank you. And my apologies for short-circuiting your discussion, but I want to make sure it tied nicely into our discussion of the 2017. So any other questions or comments? Mr. Hopkins, you had your hand up. Did you have anything? Feel free to go back into your presentation there.
You want to go to the close from last year then?
Go right ahead.
And I do want to thank Ms. Munsell, who actually has done all the work to keep track of these very complicated numbers. Appreciate the chance to share them with you tonight.
Okay, the budget I think all the actions on this budget transfer sheet with the, probably not in color, but 2 blue columns.
Yep.
Okay, on this sheet, all the action is in columns 3 through 6. Column 3 is where the balance is on June 30th. Now, since it's the last day of the fiscal year, that's the last day that expenses can be incurred. This is what our balance looked like. In total, we had a balance of about $160,000 on June 30th. We estimated that we needed a reserve of about $60,000 to pay, costs that were incurred, wages earned, or things that were not encumbered but due. So that's where you see at the bottom of column 3 that roughly $60,000. Since we had a budget, a balance of $160. we took $100,000 and put it in the medical retention fund. It's got a circle. It's $100,000 with a red circle. So we transferred it into health insurance and then put it into medical retention fund. Column 4 are the balances before final transfers on 7/31. And you'll see at the total of the bottom of that column, we had an additional $72,397 after all was said and done, settling on unliquidated encumbrances, all that. So we were able to put that amount into the medical retention fund also for a total year-end contribution of $172,397. And next columns are transfers, leaving us 36 cents.
Can I ask a question? There's a large transfer of instructional services and supplies.
Yep.
Is that correct?
Yep.
Is that pre-buying some of the
Yes.
stuff to lower the 2017 budgeted expenditure on that?
Yes, we pre-purchased textbooks.
So we had excess funds available of about $400,000 in this year's budget. And because we know what's going on with 2017,
Yep.
you went ahead and executed the acquisition of these instructional materials in fiscal year 2016
Correct.
to offset maybe the need to save these funds in 2017. Is that fair to say?
That's fair to say.
Okay, so in reality, you operated at about $400,000 to $500,000 below budget for fiscal year 2016.
Yeah.
I mean,
yes.
I'm not saying that's a bad thing. I'm
Right.
not, and there's not a gotcha there. I mean, it's just on your budget, that's about what you were able to do, right?
Well, and I don't know if we, depending on how the year plays out, we may want to pre-purchase for the following year.
Right, right. I understand.
Yeah.
I understand.
But we wouldn't do that till we see how everything else is going this year.
But it's very similar to how we operated on the town side, knowing the pressures we were coming under for fiscal year 2017. We did a lot of transfer of funds in order to take advantage of, to lower our interest costs, correct? Not lower our costs, but to lower the cash that we needed to buy it, correct, Mr. Mayor? Our debt service. And you did the same thing, only pre-buying it on the Board of Ed side in the fiscal year 2016 budget, right?
Correct. Yep.
Does everybody understand that? Or- Okay. Questions, comments, concerns on these transfers? What were your surprises this year? Where did we miss budget, or did we miss budget in the last fiscal year for the Board of Education?
Where did we miss budget?
Yeah, what was the oops? I mean, in a
Oops.
budget as large as,
Well,
hundreds of millions of dollars.
It seems that special ed's always a whoops.
Right.
We were, where we had savings, we were maintenance. It was a mild winter. We saved on overtime, plowing. There were some savings there on paving, because I don't think we had a valid bid.
But that's not putting stuff off, right? We're not.
No.
We're
Well-
not delaying maintenance projects that are going to cost us more in the future.
No.
Okay.
One of the oops was the pension. We were a little short there.
Yep.
We had some security expenses. We had, consultants for the superintendent search,
Yep.
Rachel and Balance.
Transportation, what happened there?
Transportation, we seemed to be using less and less fuel. First Student has completely updated our fleet, and it seems that, now that the more, the newer the buses are, the more efficient they must be. We're doing really well on fuel.
Now, was that, is that savings going to carry over against budget for 2017 as well, do you think?
It should.
Okay, so we budgeted 2017, and so we weren't getting the savings that we had in 2016, and now
Right.
we got it.
Right.
So that, there should be upside for us
Yeah.
in the budget in 17.
Yep.
Good. Questions, comments, concerns from anybody on the Board of Education? Seeing none. Thank you very much for being here tonight. Mr. Dwyer,
Just one comment. Thank you for bearing with me that I'm a little bit late.
sorry we couldn't wait all the way.
No, that's okay. For the last 5 years, and I'm sure prior to that, when other people who served on the Board of Education, when you ask where are the whoops, it's amazing, I'll use this year's number on 163 million, the small amount of budget transfers that are done at year end. I forget the exact number here, but it's always less than 1%, where this line was a little bit more, this line was a little bit less. And so to say that the staff, not the Board of Ed, but the staff, develop and manage a budget within 1% of 15 months ago estimates, I think is a testament to their work.
I agree with you. Thank you, Mr. Dwyer. Appreciate it. Thank you. And
Thanks,
thank you,
everybody.
team. Thanks. Have a good night. All right. Last item on the agenda is a follow-up item from our capital planning meeting. To review and discuss the Town and Board of Education non-recurring capital and capital projects planning document, their timing and related subsequent bonding requirements and estimated impact on debt service level over the next several years. This is an update item, a follow-up item from our last meeting. Mr. Mayor, I'll turn it right over to you.
Yeah, thank you, Mr. Chair. So you have the index, and Exhibit 1, as we went through last week, is the total town, Board of Ed, and total. And the difference between the one you saw last week and this one is this incorporates the WPCA expenditures over the next 20 years or 10 years, I guess. If you go to Exhibit 2, and would have been good if I'd included last week's Exhibit 2 in this package too, so you can see the comparison. But if you look at the top part, if you remember that, if you go to the right-hand column, the percent difference on the debt service, that plus 11 million was a minus 6 million. And if you go down to the bottom right number, that plus 13 was about a minus 14, if I remember correctly.
And that's
So
all.
those are the impacts of WPCA. We did leave the 5 million out. There was a discussion about that project, and it was not thrown back in. And then if you flip quickly through to the schedules 5A and 6, you see the impact. So we did two things with these schedules, actually. We added, the last week's schedules started with year 2016, 2017, so we put in the few prior years here. So you can see the history, if you look at them side by side. So Schedule 5A, you can see the total debt service in 2K12 was 245. At the end of 17, that will be 197. Into 16, 219. So you can see the debt service declining, and you can see it kind of holding steady for a while, and then, as was pointed out last week, you know, the numbers towards the end go down significantly, even with WPCA added, and partially because those aren't full numbers, because things probably will come up that aren't currently on our plate. And then if you look at Exhibit 6, you can see the 12-13 fiscal year debt service percentage there on the right-hand column, 9.52, and then it maxed at 9.93 for the fiscal year 2014, and has been going down, and that 805 that you see there for fiscal year 17, that's solid, because our budget is our budget, and our debt service is our debt service. So that's where we are today.
So we're staying under the magic 10%.
Under the magic 10, and then you see it ratchets up with some significant borrowing. If the big WPCA borrowing is in it starts in fiscal year '21, and so you see that it starts ratcheting back up and then going down a bit.
But it's, to your earlier point, it's going down a bit in the out years because we know those numbers are incomplete for items that are going to come up between then and now.
Right.
Right.
Yeah, it was a good exercise putting this all together, and gives us kind of a comparison, a little sensitivity testing.
Yeah. Thank you. Questions, comments from board members on these follow-up items? Mr. Becker?
We'll still get the historical documents sent to us? There was a follow-up I'd asked for, which was the breakout, just sort of the history of what the pages, so we could understand the projection. So it's good to see us go back further.
I'm sorry, what did you want in addition? I'm sorry.
So
How
this
do we
one,
track versus prior years where we thought we would be?
where we
right?
thought we were to the actuals for maybe 5
Basically, a
years back.
sensitivity analysis from where we're coming in actually to where you projected a few years ago we might be.
Oh, go back and see if we can find something. You got it. I will see if we can find some
It's actually a
historical
good idea because
documents.
it shows us what the margin of error is, and we can project that going forward.
You want that for debt service percentage?
Please. However far back, I mean.
Right, I
Not
got
too
it.
far.
Yeah,
Well, we
a
we
coup-
started
couple
doing
years.
this, yeah.
That's my thought, up to
Yeah.
around there, and after that,
Yeah.
I don't know if you even would have it, so yeah. Thank you.
Thank you, Mr. Becker. Follow-up item, one question I have. The clubhouse, the golf clubhouse, what's the status of that project right now? We've been hearing about it for a while. It's included on these schedules, but I'm not sure where the timing of all this is. And I've been being asked, so I want to know.
It's planned for the short term to bring that through. However, as you and I talked, we're looking at modifying our approach on how we do building committees, and
Right.
specifically the owner's rep component of that.
Right,
So we're using the Smith-Richardson project as our beta test for that.
right.
So we're in the process of, actually, I'm going through and discussing with different players, yourself included, how we'd like to modify our approach to handle the owner's rep, including bringing them on board sooner, getting them more involved in reporting to the Board of Selectmen, that type of thing, so we have more timely reporting back and some more responsibility back to the Board of Selectmen in that. So I'd expect in kind of a November timeframe that this would start coming before the boards.
But it's not coming before the boards for approval of an overall budget. Is that correct? It's
No, it
coming-
would come through, I would anticipate coming through for some approval of the building committee, some seed funding so they can get an architect involved, that type of thing.
Okay, so this is a ways away, so it's going to be owner's rep, building committee, seed money, due diligence, design work, proposal, same owner's rep, not changing the entire architectural schematic, coming back and saying, fund this.
Well, there won't be dueling architects, as there have been on some projects. There'll be just one.
Right.
So unless they want to argue with themselves. However, I am looking at the suggestion to get the TFC a bit more involved. When it comes before the Board of Selectmen, it's really the Board of Selectmen looking at a design pattern, and we're not necessarily the most technical. College degrees, to the side. So it might be, one of the thoughts is to have the TFC review the project plan up front to make sure that it's a cost-effective approach without going over the top, and looking for what opportunities might be. What we've seen in part of our lessons learned is that if we don't catch it in the design phase, by the time you start construction, it's way too far down the line.
Right.
So we want to have a better review up front to look at, have we done everything to make sure that it's cost-effective without going over the top on that? Because once we start, once we've gone out to bid, once it comes back with the numbers, we'd lose, 6 months if it got turned down by the boards at that point. And typically, we have tighter schedules than that. Not that we couldn't do it, just typically, I think we've all felt a certain amount of time pressure at times. So the idea is to do a better job of reviewing the design and getting some more input from knowledgeable experts at that point, and then making sure the owner's rep clearly has an obligation back to the boards to make sure that we're doing everything on a cost-effective basis and the architect doesn't have free rein. Trying to basically give more support to our volunteers on the building committees, who might only be sitting in on this once a month in addition to their day jobs, and that's a lot to ask them.
Questions for the first selectman on this item? Okay, last question. Any update on Holland Hill? You expressed some concerns over some of the items you were seeing. Have you heard anything back?
No, and I didn't expect to between
Right.
like last week and this week, but
Right.
I expect to in October on that.
October?
Yeah, the request was they come back as soon as they have something,
Okay.
so that we can see this as early as possible. Again, if we can catch it in the design phase, if we're going to redo something, we want to do it early in the time frame, not late.
Right. Any other questions?
We're going to do updates. Can we get a quick update on Penfield?
Yeah, it's looks like it's on track to be finished in the January timeframe.
Under budget, if I read that correctly?
Well, if you read it correctly, then I'm sure you read it correct.
You don't want to...
I read what you did, Jim.
Okay.
It's on time and under budget, but I didn't want to use that phrase.
Okay.
And you just did.
But I was talked into it.
Arm twisted, yes. Anything else? All right. Seeing none, that concludes our agenda for this evening. I will entertain a motion. Mrs. Marmion, do I have a second? Mr. DeWitt, all in favor of adjournment? All opposed, abstentions? We're done. Thank you, everybody. Good night.